Let's get another move. It's from Kerry. You bought American Express.
Yeah, exactly. So American Express is a stock we've owned for a long time, and it's had a great run, and then it's weakened. And once the stock was down 20%, we started to think about where we would buy it again. It back to 13.5 times next year's earnings, 15 times this year's earnings. Of course, the business gets hurt if people stop spending, but they have high-end customers. That part of the market is not as susceptible to the type of regressive type price increases we're going to see with tariffs. And we think that people are going to continue to travel, perhaps less, but still at this price, we discount a lot of negative news and decided to add to the position.
I mean, you do have, the market getting crushed isn't exactly good for anybody at any level of wealth.
Of course.
Right?
But
I mean, you're not factoring, that's part of the issue as well with, cratering the economy and the stock market theoretically get to the place you think you can get to.
I understand, but think about it. COVID, right, the low of COVID, when the market was down 32%, was essentially before anybody had died yet. I mean, not to be morbid, but the market began to go up when the world started to fall apart and shut down.
Because it probably sensed that the Fed bazooka and 3 bazookas worth of fiscal stimulus was coming from the government. Neither are coming to the rescue this time. I
understand that, but again, you look at stock by stock, and there are opportunities that we felt at these prices. It's not as if we added 4%.
Oh, sure. No, I hear you. I hear you, and I know how you invest. You're not looking for some dramatic outcome next week.
Correct.
I got you.
Yeah. Can I just throw an interesting stat on that? So I heard last night from JP Morgan, they said for the low-end consumer, 98% of their disposable income is spent. For the high-end consumer, 13% is spent. So even if there's massive destruction in their portfolios, that 13% is so little. They could just go to like 13 or 14 or 15% of discretionary income, continue to spend at the same levels. And that's why there's such an enormous difference between a Discover and an American Express. I think American Express has an enormous level of insulation from a worst-case scenario.
It's also why the outcome of this, however long it lasts, is going to be the wealthiest 10% end up with even more wealth.
Right, which is
because they will be adding to their portfolios of assets, whether it's real estate or equities or bonds, which will, when they do recover, you'll see even more no offense to anyone who doesn't believe this, but this is only the way it's always happened after every recession in history.